Everybody wants to follow fashion. Everybody wants the S&P 500. Everyone wants the next Vanguards. Everyone wants the Bitcoin, but they don't actually understand it, or they don't have any interest in it. They just want the money. But if you start with something that you're interested in, you'll actually be more interested in what is making that company tick, what's making that company do well, what's making that company falter. I had a call with a potential client that said, hey, like 5 years time, he wants to be a millionaire. So now you're telling me over 5 years, put 100K in, and you want that 100K to turn to $1 million over 5 years. What is the growth rate on that?
10x, isn't it?
A lot of people come in with unrealistic expectations because of what they've seen online, because of the stories that they've heard, and they assume that, it's going to be them. The anomalies are the Bitcoins, the Nvidias of the world. Those can happen, but I think they are lucky scenarios. I did work with a client that has achieved being a millionaire. They were like late 20s.
What?
I'll tell you this, it was through their business. We're going to probably see a lot more of that. We're going to see a lot more people having to find a way to live with other people purely because of affordability. They're going to be forced to.
In your opinion, right now, can you still build significant amount of wealth in the UK? And is the UK the right place to be thinking about building your wealth?
You're not defined by where you come from.
Yeah.
And I think that's a big message that I always want to tell people. Like
you have to be able to be uncomfortable.
Yeah.
Like be comfortable with being uncomfortable.
When you grow up in ends, you don't realize it when you're confident, but you have an audacity to do things that ordinarily most people wouldn't be willing to do.
Welcome back to another episode of the podcast. We've got special guests in the building. I'm your host, Atto. We have Michael, who is a certified financial planner and financial advisor and has over a decade experience in the finance industry. Michael, how are you doing today?
I'm good. I'm great, man. How are you?
Yeah, I'm good, man. It was good to see you on
Yes.
Saturday, the Black Business Show,
Yeah.
before we had this conversation. So yeah, I'm looking forward to it because I think we got a lot to talk about.
Yeah, definitely. And it was good to see. I didn't think he was that tall. I was impressed.
Well, you thought I should because
I wasn't sure.
Because the body in it is like, oh yeah. But
no,
I got long legs, man. I got long legs.
No, it was good. I had a good time there as well.
Yeah,
man.
it was. Yeah, what was like the most interesting talk for you? Like there?
Well, at the show.
Yeah.
I didn't even go into the talks. I was going to see all of the shops and just kind of see all the black businesses.
Yeah.
And I ended up just speaking to loads of people as I was there. I met a few young professionals that were trying to get into the industry in various places, and was in a position to maybe just talk to them, give them a bit of insight of what they should think about, especially when it comes to finance, because there's so many different roles in finance. Sometimes people think that they just do this qualification and then bam, like they can just get a job in this particular area. But some of these roles require, specific skill sets and specific characters, I think, as well.
Okay,
Yeah.
that's interesting. Specific characters.
Yeah, definitely.
I want to hear a bit more about that. I mean, you're going to be talking about your experience, but I think it's always great to go to events like that because it's so vibrant, right? And I only went to 2 talks. I couldn't get into Steve Bartlett talks. That was impossible.
Yeah, that's why I gave up, because I saw the queue. And I was
the
like,
queue was great.
it's a wrap.
Queue was from like an hour before, so that wasn't happening. But I saw Dean Forbes talk, which was really good.
Yes.
I saw Amma's talk, which was really good. And then it was just really just chatting to people and just like seeing what was around. So yeah, man, I think it was a nice experience. So obviously, I kind of described you as a certified financial planner, and financial advisor.
Yes.
Who would you say Michael is?
Oh, that's a good question. Who is Michael? Michael's a vibe. Michael's a good person. Michael is a helpful person. Michael's somebody that wants to make wealth accessible for other people that didn't have a chance to learn about finance when they were younger. And, Michael wants to make people feel better about their situation and, make their circumstances a bit better than when it was before they met me. So my focus is all about providing knowledge and information and helping my, whoever I meet to get to the next level, whether that's finance or whether that's, interacting with them and introducing them to somebody that's going to add value to their life. So that's what I'll say I am.
I love that. Yeah. I love that, and I love the fact that you described it from a point of characteristic. I think it's great to say what you're like, and what you're trying to achieve. That's absolutely amazing.
Yeah, I've been thinking about it a lot recently, and I feel like I'm more than just an advisor. I am an advisor at heart. I love what I do, but I think there's more to me than that. That's what I want to show people. I want to show people what I'm really about.
Yeah. And this is why I love talking about this part of the podcast. Some people are like, let's just skip to the, I want them gems. And I'm like, people, can we let people share their stories? Let's hear their stories, Let's hear more about them, right?
Yes.
I think with money, it's more than just money. Yeah. Right? Mm-hmm. Like, let's be like, when we think about money, right, you use money to do something.
Yes.
Whether it's on holiday, whether it's, I don't know, buying a house. Mm-hmm. So it shows you that money is more than just money.
Yeah. Right? It's a medium of exchange.
Exactly.
It's an exchange of value. People use it for different reasons. I do some financial coaching at times with people as well, and that's a lot to do with helping them with managing their finances, getting a better understanding of their relationship with their finances, which it sounds like they're dating their money, but in some cases it is a lot about how they perceive their money and how they spend their money, which usually comes out through their emotions. How they feel at times usually dictates how they make some of their spending. You hear stuff like retail therapy and, people just, I'm depressed, let me go and buy a nice outfit, a nice suit. It's a big thing because it impacts their budget and their finances for the long term as well.
Yeah. As a small business owner, I know how important it is to keep track of your business finances, so I was really looking for a simple way to manage my business funds effectively and to achieve my business savings goal. So I managed to find an instant savings account from Tide, which has several features that make it easier for me to set aside money for taxes or for business expenses like my studio costs and to earn extra interest while the money is being saved. I was really looking for a business finance platform that could do all of this, plus offer a high interest rate like they do of 4.07% annual equivalent rate variable on my business savings, have no withdrawal fees, provide peace of mind and security with FSCS protection, and instant access to all of my business funds. You know how business can be. Things can change very quickly, so immediate access and reliability is imperative, and Tide offers all of this plus more. Tide is very kindly sponsoring this episode, and they are offering new members a boosted business savings account earning 4.07% AER variable. New Tide customers receive a 0.78% AER boost on the standard 3.29% AER rate until 31st of March 2025. After that, the rate returns to 3.29% AER with no interest on balances above £75,000. If you're curious about this offer and want to learn more, click the link in the description of this episode. Love it. So, okay, let's talk about your story.
Yeah.
Right? Where are your parents from?
My parents are from Ghana.
Okay.
So I'm a Ghana boy, as they say.
Love that.
I grew up here in London. So I grew up in East London, in Hackney. They came here in the 80s. My dad actually migrated from Ghana to Nigeria and then moved over to Ghana. And I got an older brother, I got a younger sister. So I'm the middle child. Okay. And I say the middle child syndrome, So, East London, Hackney. I was there for quite some time for my upbringing. And then I moved to Newham area. And then I've kind of moved a bit further out to kind of Lakeside area as well now. Yeah.
What was it like growing up in Hackney for you? What was kind of the experience?
You know what? It was very interesting because for me, it was always about, trying to figure out what kind of side I was going to fall on a little bit, because you could either be on the outside looking in, in your house, outside the window, what's going on over there, all that stuff, or you could be in the midst of it. One of your friends could call you out, like, yeah, let's go out and play. And then before you know it, you're in the middle of a gang fight or something, and someone's getting stabbed over here or something's happening over here. Or you can try and keep yourself to yourself. And that was possible. And I guess for me, I had friends that had been in some of those scenarios. And I kind of saw a lot of that and thought, this isn't kind of how I want to operate. I don't think it was what I was supposed to be doing. Yeah, so it was a Interesting upbringing. Let's say the least. Yeah.
Yeah.
Interesting.
I mean, exactly. Have you seen a change in Hackney from when you grew up here?
Definitely.
Yeah.
Like, you know, I'm gonna show my age, but you know, 80s and more of a 90s baby. But in terms of the changes, you know, we're seeing a lot of, you know, the big word, the gentrification. And what that's done is, you know, it has increased the value of a lot of the properties over there, but it has actually, you know, forced a lot of the kind of social renters and even some of the leaseholders to migrate outwards naturally. You know, my parents was almost in a position to do that in their base near Hoxton area. And they were in a position where they could have went out. And, you know, luckily I spoke to them about it and I said, well, look, I think you should stay. You know, I think there's going to be a lot of value, a lot of interest in the area. Let's see what they can offer us and stay. And they ended up staying. But a lot of other people that didn't have that conversation with somebody that had a bit of more understanding of what was going on, took the money and ran. Now, I don't think there's anything wrong with that because, you know, they were offering good money for you to just go buy outside London. And, you know, that's always the idea now. So, yeah, that's what happened. So,
oh wow,
yeah,
that's
but it's
crazy.
changed drastically because you know, you see a different kind of people coming in. There's a bit more of a younger vibe now, a bit more of a vibrant, younger crowd, especially with Shoreditch popping. There's a lot of interest in that area as well. But I'll be honest, it feels a bit more relaxed.
Yeah.
In certain areas, it feels a bit more relaxed. You
That's
know,
what we love to hear.
I always talk about certain areas that I used to go to back in the day that, like, I didn't want to go past there.
Yeah.
You know, and now I'm
For
walking
real.
past, I'm like, why are these guys like walking their dogs and, you know, riding their bikes and eating their croissants? Like, like they didn't know Stabby Steve was around the corner. You know what I mean? So,
Oh my god, that's funny. Yeah, no, I hear what you're saying, and good on you for advising your parents to stick around. Are they still in the area?
yeah, they're still there.
Oh, that's mad.
They're still there.
That's
and,
crazy.
You know, I go there as much as possible, especially to drop the kids half term, you know, just drop them off and everything. But yeah, you know, I've seen it change so much. Seen it change.
I mean,
so
the
much.
value's gone crazy. Hackney is now the cool area to be in.
Yes.
Right? Like you got your Shoreditches, you've got Shoreditches now. The
Yeah,
trendy
yeah,
area,
yeah. It's the trendy area.
It's mad how like somewhere can transform. And I think, you know what, sometimes, and we'll talk a little bit more about it, but it just shows you the power of like thinking long term.
Yes.
Sometimes
Yeah.
I feel like you can definitely get some rewards from it. There's going to be ups and downs. Obviously, I guess, you know, the dangers,
Yes.
navigating the dangers
Yep.
is the important part.
Definitely.
If you're able to, and that's real life dangers, you're able to navigate that, then you can, there is a, you know, something to it as well.
But, you know, like you said, I think it is about the long term when you're thinking about these, because even in that scenario, the easy win, the short term win was to take the money and leave.
Yeah.
The long term was to hold out and see what they're building and whether it makes sense to kind of move that value into these places and, you know, benefit off that over time. And, you know, they've managed to do that. So yeah, they're in a good position at the moment. Hopefully they can continue and, you know, we'll see how it goes from there.
Yeah, that's crazy. That's crazy. So, financial planner.
Yes.
Right? What was the route to becoming a certified financial planner? How did that happen?
Wow, so it's an interesting story for me, I think. I was at university studying economics and accounting. So I thought I was going to be an accountant.
Okay.
Yeah, when I was at university. I was always I was okay at maths, you know, A at GCSEs, all that kind of stuff and everything. But when I got to university, I thought, oh, you know, actually I'd be interested in accounting. And when I got to my last year, I studied international business. And that's when I really saw like the bigger picture of finance and started looking at the idea of investing. And off the back of that, you know, got to the last year and I said, yep, I want to move to stockbroking.
Okay.
So that was just a random turn of events where I was like, this is what I want to do. I need to figure that out. And, you know, my journey wasn't that straightforward. You know, that international business topic, that was a struggle in terms of getting past that. I wasn't the best at economics.
Okay.
You know, maths was okay, but economics, I just couldn't get my head around it properly. And when I left uni, I got a 2-2, and I was like, oh man, like, damn, what am I gonna do? Because at that time, the conversation was around, you got to get the first so you can go to a good school, a good job, get to a good job, graduate role.
Yeah.
So I ended up working in the bank. Working in the bank, retail bank, and started doing personal banking. And to be fair, I think it just kind of works for me because I'm a bit of a people person, you know. So I was in a position to interact with people, help them with their accounts, personal loans, credit cards, finance. And from that role, I started interacting with a financial advisor at the bank.
Yeah.
And I started helping him, you know, get some clients. So my position at the time, you know, I was in one of the rooms, I would have people coming in, I'm helping them with their accounts. I'm like, oh, just realized, you know, your pension is a bit low. What's going on here? Or, you know, have you spoke to anyone about your insurance? Have you thought about your son? Your son's sitting there. Have you thought about your son and all that kind of stuff? And I'm like, go speak to the financial advisor in the other room, and, you know, he can help you out. And that became my position after a while, was kind of anyone that was coming in, I was talking to them about these things. Yeah. And, you know, sending them over to the advisor at the time. And then I think I realized I wanted to be in that role. I got an email from him one day where he had, you know, let's say signed up a client, or the client wanted to work with him. And he said, hey, like, well done. You know, you've done really well. I've made X amount of money, or this is what I've made from sorting out the business. And here's your points. I was like, points? I was like, so I did all this to get some points, and you got money out of this. I said, I'm on the wrong side of this trade.
Sorry, when you say points, what does that mean?
So, you know, at the time, if you were opening accounts and stuff like that, there would be a point system in place. So they would add certain points. I don't know, if you open a bank account, it'd be like 40 points. If you open like an advanced account, it was like 100 points. So if a client ended up helping or doing some insurance, there might have been some points tied to it. I didn't really think about it, but it went into the email, and I was like, wait a minute, like, I want to be on that side.
Yeah,
you know, I want to
get the money.
Yeah, I want to get the money. Like, I help the client as well.
Yeah.
You know, so that was my first kind of side of realizing what I wanted to do as an advisor. And then I actually left the bank to go and study my qualifications at the time for financial advice. At the time, it was the CFA, Certificate for Financial Advisors. I started my first exam, passed it, and then for whatever reason, I just stumbled across my level 3 CISI exams in securities. And that was to learn about the stock market, learn about trading, investing, stuff like that. And I just made the switch. I was like, yep, that's me. Okay. I'm going to do that. Yeah. And, you know, got that qualification out of the way. And at that point, I was, at the time, qualified to be a stockbroker, and found a boutique firm in the city and managed to join them.
Okay.
Yeah.
Wow.
Yeah. So that was a while ago. And, you know,
crazy.
With that journey, so that was my first kind of journey in the city as a broker, as a young broker, learning the ropes, getting on the phone, speaking to clients, trading their portfolios. And I was doing that for about maybe 6-7 years.
Okay, so you basically got your dream job.
Yeah, at the time, because I was in my 20s. Yeah, I was at home, you know, so money was coming in. I could relax, you know, I could spend it. I was in Shoreditch, you know, I was local, stuff like that, in the city as well. So it was a good time. And then, you know, started getting closer to my 30s, and I thought, you know, actually, you know, I want to start thinking about maybe some kind of long-term planning, and kind of reverted back to that guy that wanted to be a financial advisor, and was like, oh, I forgot about this for a second. I was in the sauce too much. I was enjoying it too much. And then I realized, nah, this is what I'm actually trying to do for the long term. So I transitioned into financial advice back in 2017, and that's when I kind of made that jump into that role. Okay. Yeah.
Wow. What an absolute journey. Yeah. And it just shows you as well, like, sometimes there's like more than one path, right? Because the 2-2 thing, I
Yeah.
think I've said this to people. When I got a 2-2, I'm not ashamed to say that. But I think sometimes when you finish uni, you do feel ashamed because the standard is the 2-1.
Yeah.
Ooh, don't get 2-1. You get 2-2, anything below 2-1, you're done. You finish. Yeah, you're not getting nothing.
It's a wrap.
But
It's
your
a wrap.
journey, my journey
Yeah.
shows that no, that's not completely true.
Yeah.
There are other aspects to. You have to graft in a different way.
Yeah,
Basically,
definitely.
right?
You had
it
to.
might not be traditional.
Yeah, you had to change how you approach your career, how you
Yeah.
approach things. Not all of the opportunities were the same. But it's interesting, like, you know, going into broking, I didn't really need a degree to go to
Yeah.
broking, to be honest.
That's
like when I got
crazy.
there, I realized, like, you know, this is a sales job. Like this is about grafting. This is about having confidence. This is about sometimes being a bit arrogant and getting on the phone and
Yeah.
you know, having that conversation, that competition, that negotiation with someone on the other side. And
Yeah.
you know, sometimes you had to learn on the job a little bit. So yeah, it was a good time. It was a good
That's
time,
crazy.
interesting time. Yeah,
It's mad, and it's also the power of like just sometimes that work experience.
Yeah.
And the fact that you was working in a bank opened the doors for you that you didn't realize your doors were already open. That
I
you
had
didn't
no
even
idea.
really. Do you know what I mean?
Yeah.
Like, it's
just
mad.
working in a retail branch. I was in
Yeah.
Walthamstow, so East London, just in the branches, and I never thought that. You know, I always had the thought of Canary Wharf. I always had the
Yeah.
thought of like the big HSBC or the big Barclays or the Canary Wharf building,
Yeah.
all that kind of stuff. But I never really thought about it would be a transition from that to where I ended up effectively. Yeah.
Sick. So what's the difference between financial planning or financial planner
Yeah.
and financial advisor? I think it would be good for us to clear that up for people.
Yeah, because, you know, to be fair, if you go online on LinkedIn, like everyone
Yeah.
is
It's
either
different.
or.
Yeah,
Yeah, it's
yeah,
a mix. It's
yeah.
a mix. And, you know, I think it depends on the advisor and how they pursue their business and how they operate with their clients. But if I was to kind of separate the two, the financial planning aspect is effectively kind of the overview of a client's circumstances from where they are now to where they're trying to be in the future. You know, if I was trying to kind of put in another example, it's almost like having a football manager, kind of looking at the board and, you know, positioning all the players on the pitch and kind of dictating where he thinks the game's going to go and what he's trying to do to win the game effectively, and looking at it from that bird's eye view. So the financial planning piece is all about kind of looking at all of the objectives that the client is trying to achieve and identifying how best to achieve those objectives. Now, the financial advisor is usually specifying in one particular area at a time,
Okay.
or maybe focusing on one area. So regardless of what the client is trying to do from a bigger picture, they may only be looking at this specific area for them. I may only be looking at pensions. I may only be looking at investments. I may only be looking at retirement planning specifically. And I may not be trying to focus on another area. So, you know, what I usually say is, you know, not all advisors are financial planners, but all financial planners are advisors.
Ah, okay. I get it.
You know?
Yeah. Okay.
And I think it's because the financial planning, the way that they kind of look at it is they do try to look at from a bigger picture play. I'm not saying the advisor can't do that either. But the way that they've been taught to address it is from that
Okay.
bigger perspective, if that
Okay.
makes sense.
Interesting.
Yeah.
So if, like, say somebody wanted to work with one of those roles,
Yeah.
let's say a financial planner,
Yes.
do they need an advisor then? Generally speaking, I mean,
Are you asking about the client or the...
yeah, from a client's point of view, like if somebody, because obviously I guess people will be seeking this stuff out. So I'm trying to get a bit of clarity on like, how
I
that
think
kind of
it depends
works.
on what the client is trying to achieve.
Okay. Interesting.
And how far the advisor is willing to go to help the client.
Right. Okay.
Because you may speak to some advisors that are happy to just address this part of their business.
Yeah. Like
hey,
just retirement planning.
yeah,
basically.
I need help with
Yeah.
my pension. Okay, brilliant. I do pensions.
Yeah.
I can help you with that.
Okay.
I need help with my estate planning. Brilliant. I can do that. I can sort that out for you. That's it.
Okay.
You know, some advisors are comfortable with saying, look, I don't specialize in that area. I can send you over to Dave over there. he's great at investments, have a chat with him. So I think it is down to the preference of the firm, preference of the advisor, what kind of areas that they want to deal with. So for example, I am focusing on tech professionals, for example. You know, for me, that is about helping these individuals in these roles maximize their income. Think more about how to invest their money, what to do with their bonuses, what to do with their RSUs, their stock options.
The stock options ones.
Yeah, so
Interesting.
thinking more about how to accumulate wealth over time. Now, I can speak to clients about when they get to retirement, and I have some clients that are at that stage. But that's the area that I've chosen to focus on. So I think it's about the choice of the advisor and then the objective for the client as well.
So with a planner, what kind of then would you go to somebody for a planner for in a way?
So
as advisor?
a key thing that a financial planner would do is provide like a forecast, a cash flow forecast.
Oh, I like the sound of that.
It gets better. Okay. So, you know, with that, you know, I might sit through a meeting with a client and identify how much money they're spending over time, and whether what they're doing is going to either provide a shortfall or provide a surplus in terms of their long-term objectives. So if we're having a conversation about a 30-year-old or 40-year-old that's trying to retire at 60, you know, the cash flow model would project what their future objectives are going to look like and whether they're going to be able to achieve them. So I can be in a position just based on what they've told me that actually looking at what you've told me, you're not going to reach your goal. You're not going to get to 60 and retire because you haven't put all the steps in place. So these are the things that we need to identify.
I love that.
An advisor might not use that cash flow model. They might just go, let me help you with what to do with your pension. Now that there's nothing wrong with that. But the other side of that coin is if there's other objectives that they need to achieve and they only focus on just the one thing, they might miss out on what else they need to put in place for that person. Does that make sense?
Yeah, that makes sense. Yeah. And I've got just a question for you later from a subscriber. I don't remember the subscriber's name, but if you're listening, watching, you'll be familiar with this question because you asked it. So okay, cool. I wanted to know about some of your tech clients because I'm interested because I work in tech, and I think I love the fact that you said your focus on tech because I don't think I've seen any other financial planner say that, and I think it's very smart, especially the fact that you mentioned stock options. So there's lots of startups that give their employees, stocks. I know somebody who has that position. Actually, they've been the company more than 3 years. I think actually they can cash in if they want or not. So I really like that because that's not things that people think about. Oh, like how do you, like you say, build wealth outside of your income just from your 9 to 5? So I guess what does the makeup like of your clients typically like look like? What do they typically do and what industries do they kind of work in?
You know, they are typically in a lot of these bigger tech firms, you know, the Facebook, the Spotify's, these kind of companies. They are, you know, software developers, privacy managers, development managers. They're usually at kind of maybe director or C-suite level, and they are trying to figure out how to operate, especially the younger ones. If I find clients that I tend to meet in their early 30s, like mid 30s or something like that, they're trying to navigate the world of adulting. That's what I always say to you. You're right there now. You know, maybe you've bought the house, you know, you've just had your first child, you got married, or a big event has happened. And you're now in a position where you're like, okay, I need to take things seriously. Okay, what does the next step look like? I know you felt that, isn't it?
Oh yeah, I've had a couple big events, marriage, buying a house. Those are big events.
Yeah, they are. And you know, those are the short-term events that happen, and you know, they're important as well. And they will always be there. There will always be these short-term events that are occurring. And if you have the conversation, hopefully the person you're in front of will remind you of the long-term plan. You know, this is cool for the next 2 years, but what about the next 20 years?
Yeah.
You know, what about the next 15 years? You know, what have you thought about that? Why haven't you thought about that? And sometimes you get a bit of pushback, like, yo, well, I'm not thinking about it. I ain't got time for that. I'm like, okay, cool. But, you know, when do you want it to end? You know, when do you want it to end?
Yeah.
And, you know, nobody's really sitting there saying, hey, I want it to end like the next 10 years. You know, they want to look and feel like their parents, but in a better version of that.
Yeah.
Most of the time, especially, you know, us coming from the diaspora and us seeing our parents kind of migrate over here, and what they've had to go through to get us to where we are. We're looking at that saying, hey, like we want to do more, you know, and that's the younger generation are always kind of looking at that as well. So, you know, how do you do that? Yeah.
That's crazy. So what do some of your clients do really well where they're able to make like good money? Because I guess that's their focus, right? Yeah.
So when you say what do you mean in terms of with their finances currently, or just in general?
Both. Let's go both.
Okay.
I mean, look, we want to know it all.
You know what? I think what my clients do really well is they focus on having good life experiences.
Okay.
They focus on spending their money in places that are keeping them motivated, keeping them happy, and encouraging them to thrive for more, strive for more. And sometimes they can get a little bit carried away with that. But I think what that also does is it keeps them going to the next level.
Yeah.
From a financial perspective.
Okay.
What they also do is they're very good at doing their own due diligence. You know, they're very good at, I've already looked at this company, I've already looked at Vanguard, I've already looked at this platform, or, you know, now that you've mentioned it, I will have a check. You know, they're very good at doing that stuff. I think back in the day, especially like when I think about my broking days, you know, the professionals always had all the information.
Okay.
It was always lopsided
Interesting.
to the professional. So even when you went to a broker, you know, you go on the phone and broker's like, hey, I got a trade, I got a company that you haven't heard of that I think you should buy into, you know. So the power of information was on the side of the professional. I think now there's a lot more information out there that people can look for themselves and identify certain key areas. I think what they usually come to the advisor to do is just kind of put all those pieces together.
Yeah.
Yeah.
Interesting. I love that. So obviously you've been in the industry for a long time, 10 years, and I feel you've got quite well-rounded experience because you've done the stockbroking part, you know, and you've done the financial planning, financial advisory part. So you're very well-rounded, which I think is quite good because then it makes you more holistic, right?
Yeah.
So I guess, you know, in your time, what are like some of the key insights that you've kind of found out from being in the industry? Have you had like any aha moments?
You know, the aha moments have really been the difference between how a lot of different people perceive money or think about money, how they operate. There's a lot of people out there that are earning a lot of money but are spending a lot of money, which means that they're on this Ferris wheel of just enjoying. And if they don't put things in place, they're going to keep doing that and realize they're going to get to a certain age and they're going to be like, what do I do now? And I guess an aha moment for me, I always talk to clients about two scenarios. I had a client, it was a small client, but he was at retirement, about to retire. And he came to me, got referred to me. I said, yeah, I'll help him. Helped him sort out his pensions and everything. And he was just about to retire. And I think he was a lorry driver. I've been doing it for like 35 years, something like that, North London. And we used to talk like every so often after I helped him out with a few things. And he was kind of in a position where he was like, I'm by myself. I've done my job for all this time. What do I do next?
Yeah.
And he got to retirement, started living off his state pension, and he had a bit of money on the side. And within like 10 months, he was gone.
Oh my God.
Yeah. I know you wasn't expected to go there. And then I've seen the other side. I've seen the other side of the coin where, you know, I've seen clients get to a certain point, get to retirement. They've had this, you know, cushy life. Things have been nice and they've been kind of tagging along and think, and they've gotten to that point and they don't know what to do. They don't have the money to do what they actually want to do.
Yeah.
And for me, that was a bit of a aha moment of, I think there needs to be balance with this. I think there needs to be balance in terms of what can you enjoy now, but also what can you put away for the future.
Yeah. Yeah.
And I think that was my aha moment because I never really thought about it from that perspective before. But seeing both sides, where one had probably had enough, you know, not living a lavish life or anything, but he had more than enough, you know, and then one that didn't have anything at all.
Yeah.
And it was kind of like, okay, how do you, you know, kind of make this, square this circle effectively?
Yeah. It's like definitely like making sure that you have enough fun in your life. Like, don't like take away so much and you get towards it. To be fair, because some people do make good points like, oh, I don't want to be rich when I'm old. And I do understand that, like, you know, I'm not saying that I don't understand that. I get it. I understand wanting that. Yeah. But I think it's also, if you want that, be realistic with yourself, what you've got to do to get that, right?
Definitely.
That's all I'm saying.
And you know, I think there are other movements that you hear about. There's like the FIRE movement.
Yeah.
Which is like the financial independence, retire early.
Yeah.
And that is all about like, you know, I want to retire now. I want to retire as soon as possible.
Yeah.
I had someone the other day ask me like, hey, if I had 50K, like, how could you help me retire tomorrow? And I was like, come on. Like,
what? That's not enough.
Yeah, come on, man. What am I? I'm not mysterious. Like, what is going on here?
50K to make him retire tomorrow. What are you turning the 50K to?
I don't know.
Oh my God.
So a prayer. I don't know what it is, but you know, but there is that mentality of like the short-term win and, you know, trying to get everything now. But that movement, even the FIRE movement, you know, if you look into it, it usually requires the person to be saving like 85% of their income. You know, that's a lot of money to put aside. Now, if you could do it, great. But, you know, there's a lot that you don't get to do at that point. You know, beans and toast are your friend. Enjoy it. There's nothing wrong with that. But you're going to have to make those sacrifices to put yourself in those positions. So it's about what do you want as a client? What is important to you?
85% in the UK. Well, in London, that seems impossible. I'm sorry.
Nah, you can't.
I don't know what 85% unless your salary is crazy.
Now people's mortgages are 85%
exactly
of their income.
85% on fire, man. You ain't eating nothing. We even make it out alive doing that. Oh my God.
How long will that money last? How long will that money even last?
That's crazy. So I've been doing this podcast for just over 3 years and I really want to bring it live for you all. So I'm going to need a favor from you. If you're interested in seeing the Savvy Wallet podcast live, please register your interest by signing up to my mailing list with the link in the description of this episode. Thank you so much for your support so far. So, okay, let's talk a bit about building wealth, right?
Yeah.
So from a, you know, financial planning point of view, when we talk about building wealth, because this is, you know, banded around a lot. What from your perspective, what does it mean?
I think when you're talking about building wealth, you're talking about building assets over time. You know, putting yourself in a position where you can accumulate value in different areas, so that when you get to that later stage, you can live off the interest of those assets and not just the assets itself.
Yeah.
And, you know, a lot of people, you know, talk to me about being rich and being wealthy. I think they're two different things. And I think with wealth, it's something that happens over time. I don't think it's something that you just accumulate straight away. Sure, you know, I think part of the wealth is the knowledge. So I always try to tell people, like, for me, a lot of it is the knowledge. If I can kind of give you the information hopefully over time, if you implement this stuff, it will help you. But I think to actually build wealth, or, you know, even the term generational wealth, you know, that's not something that you build today. It's something that you build over generations, over time. So I think that's what it's about, accumulating assets that you can benefit from.
Yeah. And one of the most prominent ways that people build wealth, definitely in the UK anyway, is through investing in property. And I was reading today that Seville's was stating that there's about over 670,000 property millionaires in the UK, which is crazy. Yeah. So a lot of people are using that as a vehicle to, you know, build their wealth. What other kind of ways do you know of that people, you know, do to build their wealth?
Yeah, I think, you know, pensions is obviously quite a powerful tool. You know, there's always a conversation around pensions because it takes time for you to get access to it. Yeah. But that's what it's for. It's a wealth builder. It's to accumulate wealth over time. So you're in a position to pull from that at a later date. It's forcing you to build wealth, you know, because you can't take the money out early on unless you're terminally ill, you know, essentially. So pensions are very powerful tools, especially because they have some tax benefits as well. Obviously investing in the stock market, which kind of coincides with pensions, but the stock market is an opportunity to grow your money over time, depending on where you're putting your money, whether you're investing in an individual company or whether you're investing in kind of any index funds or anything like that. And then, you know, I think having a business as well. I think sometimes people forget that most people are rich or wealthy because of their businesses that they've accumulated over time or they've been passed down. You know, people talk about the Rockefellers and all these other companies. Like every company is somebody's business that was named after their father or their family, and it's been passed down, and that's where a lot of their wealth has come from. Look at the Walmart family, you know, in the US and stuff like that. I think business is sometimes forgotten.
I think it's really forgotten.
Yeah.
That's you're absolutely right, because actually the businesses are who employ people.
Yeah.
They're the ones who effectively create all this money and wealth and everything like that. So yeah, no, I completely agree. Focusing on the stock market, right? Like I feel like and I've spoken about the stock market on, you know, a few episodes of the podcast, and I want to keep on continuing because I know it's not as straightforward for people to understand, you know, about investing in the stock market. But I'm like a very big fan of it as a way to, you know, as one of the ways to build wealth. Maybe not the only way, but one of the ways. So there's this real fear though about it. So I guess what are the benefits of investing in the stock market?
Yeah, so let's start with what it is. You know, the stock market is a playground.
Okay.
It's a playground for people to buy and sell companies, effectively. Buy and sell the value of companies. And when you enter that playground, you're on either side of that trade. You're either the buyer of that investment or company, or the seller of that company. Okay. So the key benefits of that is you're entering into a playground where if you put your chips on the table or you put your money in this company, you have an opportunity to benefit off the growth of that company. So as that company grows, your money should grow with it.
Yeah.
But on the other side, if that company starts to falter and it starts to dissipate and it's not working, then your money might start to disappear as well. So you have to be comfortable with the idea that both are true. Both could happen. It could either go well or could go bad for you. But you have to be willing to play the game. Yeah.
Yeah, and that's the thing. You have to be willing to play the game, but understand the risks of the game. Yeah. And I like to always highlight that the people shouldn't be coming to the stock market and think it's a bank account.
Yeah. You know, I think because I do have conversations with clients and individuals about keeping money in the market as opposed to the banks, for example. And I get it, because there is also this conversation around what are the banks doing with our money, effectively.
Yeah, doing what you're doing.
Yeah. So I get it. But it really comes down to risk and how comfortable you are with risk as an individual. And, you know, a lot of people just aren't comfortable with the stock market because it's intangible.
Okay.
You know, it's invisible to some of these people. So for them, you know, they're putting it in, not even just in a black hole, it's just going into like a mist or somewhere, and then it's supposed to just reappear at a different value. It's like magic to them.
Yeah.
So for some people, it's not a comfortable position to be in. They have to get used to that. They have to understand what it actually looks like for them to benefit from it. Yeah.
That's the thing. Yeah. It's like, it's just a complete different mindset. Like, I think if you're going to treat it like a bank, I don't want to say it's a wrong place for you, but then it's like maybe a lower risk profile for yourself or something like that.
You mean the stock market or the bank?
There's no stock market. I'm saying if you see it as like, basically what I'm trying to say is that like some people put £100 into the stock market, right? Whether it's like, you know, index fund or stocks. I know stocks are more volatile, right? And then they see the money go down, right? Right. And it starts freaking out. Oh my God, I've lost money. And then they take it out and then never to be seen. Yeah. Again, I know some people are like that. Actually, you know, on that note, with your clients, how do you talk them through that kind of situation as well to, you know, get them to understand it comes with it?
I think they have to decide what they're in it for. Are they trying to invest in the stock market, or are they trying to trade the stock market? So if you remember, I mentioned that the stock market is a playground for buyers and sellers. Are you in it to be in and out and trying to get that small win or that short-term win? Or are you in it for the long term? So, you know, when I was broking, and, you know, there was a phrase that some of the brokers used to say about time in the market is better than time in the market.
Yeah.
And what that's basically talking about is, you know, you usually benefit from growing your money over time as opposed to trying to buy at the right time and trying to sell at the right time.
Okay.
And so for me, the conversation is about educating my clients about the difference between the two. You know, trading is an in and out scenario. Investing is a long-term play.
Yeah.
You know, if you're talking about generational wealth or passive income, you know, we're talking about acquiring money off assets that exist, that are still there. If you take your money out of the stock market, it doesn't exist anymore. It's not there for you to kind of benefit off.
Yeah, I get
if that makes sense.
Yeah.
You have to now find another trade. You have to find another business to invest in. So you're always on the fence. You're always going back in and out, back in and out. You don't know what the next one could be. It's like going in the casino.
Yeah.
You know, you could be, you know, on this table and you've won here, you won here, and then you go to the last one and, you know, all your chips in and then you're out. So, and that's when it can become more of a gamble as opposed to an investment.
Yeah, I get it. Yeah, that makes complete sense. So are there any other drawbacks and risks investing in the stock market aside from obviously completely losing all your money, potentially, or partial of it?
Yeah, the completely losing all your money depends on what part of the market you put your money into. You know, the London Stock Exchange, one of the largest in the world. You got the US market as well. And then you might have the smaller company space. So, you know, when I was broking, I was trading in the AIM, the alternative investment market, a lot of small cap companies, you know, penny shares as well.
What's small cap? Just
what small cap?
I know what it is, but just for the listeners,
the small cap market is essentially where some of the entry level firms enter the market. Okay. It might be that they are less than, I don't know, £750,000 in terms of market cap, or they may have only been trading for a couple of years, but they are going into this market at early stage.
Okay.
And because they're very early, they might not have much of a presence, much of a track record, and their share price might be at quite a low level. So you could have a company that's trading like 2p a share, for example, compared to like a Meta that might be trading at $500 a share. It's a big difference. And the benefit with those companies at the lower end is, you know, if a company goes from 2 to 3p, that's a 50% increase.
Yeah.
You know, that's a jump. You know, it's going to take Meta, you know, 500, 50% go to 750 for it to get that same kind of, if you enter at that point.
Okay.
So there is a much volatile opportunity to receive growth in that. But then on the flip side, you know, it could easily disappear. And I've seen some of those companies, you know, go from 1p to 10p and go all the way back down again.
Yeah. But it's super volatile. That's like, you can, if you put 1,000, it could go to 0 in a week. Done.
Easy.
Yeah.
I've seen some companies with some like interesting journeys in a very short period of time.
That's crazy. And actually staying on that topic, right? Because I do always get questions, oh, what do I invest in? And obviously I can never say to people, invest in that, right? But just to get people to understand it a bit more, right? Like, you know, stocks versus like investing in stocks versus like investing in ETFs versus like index funds. How can someone kind of identify what's the best way for them, especially if they're starting, they're new, right? Which I think a lot of the people that listen to this are new to invest in, you know. How can I identify that?
So I have this question a lot with a lot of people I've done coaching with, and I always say to them, start with something that you're interested in.
Okay.
And the reason I say that is because everybody wants to follow fashion. Everybody wants the S&P 500s. Everyone wants the next Vanguards. Everyone wants the next spot ETF, Bitcoin, but they don't actually understand it, or they don't have any interest in it. They just want the money, which means that they don't really understand how it's trading, any kind of track record, any patterns. But if you start with something that you're interested in, you know, if you're interested in books, you know, maybe look at Penguin. You know, if you're interested in procurement or some of these other places, you know, look at WPP. If you're interested in, you know, the tech space, look at Alphabet. You know, start with something that you're interested, because what will start to happen is, if you're actually interested in these areas, you will actually be more interested in what's going on with the company. And what is making that company tick. What's making that company do well, what's making that company falter. And that might dictate your decisions on how much money you put in it, if you put more in, if you continue to invest in it, if you grow over time. Because now you have more of a vested interest in buying into that company, and you're thinking about it from a different perspective.
Okay. I love that. And, you know, tied to what we were talking about Millionaire, right? So we know it's possible to become a millionaire from investing in the stock market, right? Have you, in the long term, let me just say that, let me clear that up before people say, oh, in a day. Have you worked with any clients that have achieved this, and how did they achieve it?
I did work with a client that has achieved being a millionaire.
Okay. Wow, that's exceptional.
And they were quite young. I won't say their name, but they were quite young. And
how young are we saying? You can say the range.
They were like late 20s.
What?
Yeah. But,
wow. Okay.
But I'll tell you this, it was through their business.
Right, okay.
It was through, you know, establishing their business, growing it to an international level, and then being in a position to raise money and get it to even bigger heights effectively. And off the back of that, they were able to kind of reap the benefits of that. Effectively. If we're talking about trading,
investing,
I haven't seen that.
I
haven't seen that. And I think the reason I haven't seen that is because with the clients that I've been dealing with, or the clients I've been seeing over time, I haven't seen it long enough for them to get to that level.
Interesting.
Or I haven't seen enough money that's been accumulated over time to get to that level. So you know, what we're really talking about is compound interest.
Yeah.
Yeah. I did like a newsletter every month, Mike's Moments. Yeah. And just in the last one, I was just talking about a very quick segment about risk and growing your money and having £10,000 growing over 30 years at 6% growth rate.
Yeah.
Annualize 6% every year. You know, that doesn't happen realistically, but you know, the market's got up and down, but on average it could average out like that. You know, the FTSE 100 has probably averaged about 7% over the last 30 years since like 1985.
Yeah.
If you had £10,000 and you did that, it would accumulate to about £60,000. That's if you don't put any more money in.
Yeah.
Now, if you did the same thing, £10,000, 30 years, but you had an 8% growth rate, which you're probably seeing maybe in the US market, probably more, that £10,000 would accumulate to about 100,000.
Okay.
So what we're seeing here is with a higher return, same amount of money, same time, we've seen an increase of about 40K of compounded, you know, growth.
Yeah.
And that's just with a similar amount of money and an extra 2%. And this is excluding inflation and everything like that. So all that's telling me is, you know, for you to really be in a position to get to that, you need to be in it for the long term for you to really accumulate that kind of wealth.
Okay.
The anomalies are the Bitcoins and, you know, the Nvidias of the world, you know, those can happen, but I think they are lucky scenarios. I know we talked a little bit about the psychology of money in the book, and you know that there's a part of that book that talks about kind of being lucky, you know, and I think sometimes it is about luck.
Yeah.
You know, if you speak to a lot of people that tell you that they made money from Bitcoin, like the millionaires early on, you know, every time I've spoken to someone that's told me a story about someone that's made money in Bitcoin, the story usually goes, I bought this Bitcoin, I thought, I'll see what happens, and then I forgot about it.
I forgot about becoming a millionaire.
I couldn't find the wallet, and you know, 8 years later, I looked again, I was a millionaire.
Wow.
Like, there may be a few, but I don't always hear the story of like, I was driven, I was actively trading this, I was in and out regularly. Here's my track record, here's my consistent trades. I went in at this point, I got out at this point, and with my expertise and my skill set, I made from 100 to, I'm not saying it can't happen, but I don't hear it that often. Yeah. In terms of like the majority of people that are doing that. Yeah.
You know what? I love the fact that you said business, you've seen somebody do it quicker through business. And it's not that to say it's impossible to do it through the stock market. It just takes a longer time frame. But if you do have more money, of course, it's quicker, right? It's like anything, right? It's like the levers, right? It's the configuration. So that's amazing. And then, you know, obviously you can invest in stocks and shares, so you can use, you know, I guess what's the benefits of using the stocks and shares?
So the stocks and shares ISA was an incentive for people to grow their money tax free. So it's essentially a tax wrapper. You put the money in, and any growth within that is tax free. And you can put £20,000 in every year, every tax year. So tax year runs from April to April. Once it gets to April the 6th, your 20,000 resets again. So that's one of the benefits there. Having that money in there will allow that money to grow over time, tax free. And you know, it might not sound like too much now, but when you start to think about it, over time, you start accumulating wealth. It's all about the capital gains that you're looking to pull out from those companies, that you could be liable for tax. And even from a savings perspective, you know, a lot of people don't really realize that there's a personal savings allowance. You know, interest rates are up now. So if you make more than £1,000 on interest, you could be liable for tax on that. There's £500 for high rate taxpayers. So, you know, keep your money in the bank could still mean that money could be liable for tax.
Yeah, it's true. It's still paying tax.
Yeah. So there is some definite benefits of using the ISA for those purposes as well.
Amazing. And, you know, in your time, obviously, in stockbroker. I guess what lessons did you learn? Obviously, for investing for
Yeah.
clients, trading for clients. What did you kind of learn in your time doing that?
I think the lessons that I learned was, I talked a lot about kind of holding your money in there. The one other lesson I learned was, there was a phrase we used to say, you can't go broke taking a profit.
Okay.
And that was about the idea of, if you was in a trade for a client and the price went up, 20%, 30%, 100%, you're kind of looking at a client like, okay, well, why aren't we taking the money? And the truth of it was, a lot of the time, the client just wanted more. It just became greedy. They wanted more. And the reason why I use the word greedy as opposed to like they would kind of like, they wanted to hold it, is because they wanted to sell at some point. It wasn't that they said, "No, Mike, this company has great valuations. I've looked at the cash flows. I understand the business model. I've seen the multiples, and I want to keep buying in this company." They just wanted more. And they were waiting for it to get to a certain number in their heads before they took it out.
Okay.
That's what I noticed with that side. So, everyone has a number.
Yeah.
I think that's what it was. Everyone has a number. They get into a trade and they have a number of what they want. They have a price. They have a target in their heads. When they get there, then they'll decide what they want to do.
Yeah.
It's not always then they'll get out.
It's always what it's like.
Yeah.
It's crazy.
Yeah.
So what's like a sensible amount people should be looking to, if we're thinking about investing, what's like a sensible amount of your monthly, I'm going to say income, because obviously I'm assuming income is a better term, because I don't know your salary, if your money's from business or salary, whatever.
Yeah. I think there are some guidelines out there. There's the 50, 30, 20 rule, which kind of talks about like saving 20% of your income. Now that savings, when I talk to clients about it, that savings could incorporate, money going to cash, but also money going to savings as well. And there are some conversations around like saving 15% of your money and investing it over time. And that should kind of like guarantee your retirement and stuff like that. If we're just talking about starting, then I always talk to clients about investing what you can afford to lose.
Okay.
And that is going to be different for everybody, because their income is going to be different, and because their circumstances are going to be different. Yeah. So for me, the one thing I always suggest that they should do is, it depends on who I'm speaking to, but usually when I'm speaking to like young people that are trying to figure out what to do, I always ask them like, what do they like to spend their money on? And if they were in a club, how much would they usually spend on a drink? Yeah. And if that is an amount that they're comfortable to lose because they got the benefit of that drink or that bottle or whatever, maybe that should be an amount that they should start with, because it's not going to be as much as a burden as,
I like that,
maybe, taking £1,000 out, whatever that £1,000 is, to your income.
Yeah.
And then throwing it into the stock market, into this mist, this unknown world that they don't even understand. At least then you can go in with, open eyes and go, well, it's only a drink. Let me stick it in there and start, and then kind of go from there and just build from there.
Interesting. I like the drink, and that's true, because you're right. Is a drink is just almost throwaway, right?
Yeah.
Yes, you're enjoying it, but it's throwaway, right? Like, you're not gonna get it again. You pay for it, you drink it, and that's it. Is done. Yeah, I do like that. That's so interesting. So I had a question from a subscriber. So they said, how do you save for a deposit for a house alongside investing each month? Surely you will build up a stocks and shares ISA and end up having to spend a large chunk of it on your house deposit. Do you restart at that point, or should there be a split on investments towards retirement and short-term goals, etc.? Seems a shame to split money over multiple ISAs, but you wouldn't want to empty your ISA.
It's a tough one.
It's a tough one.
Yeah.
Right?
So I don't know this client's circumstances.
Yeah.
Okay. But I'll tell them what I usually see happens. Yeah. Clients usually want to buy the house because it's sentimental to them. It's important to them. It's their first house. It's like their first child.
Yeah.
If they get to the point where the house is, 300K and they've got a 30K deposit, like, brilliant. And they just realize they've got to pay 5K solicitor fees. They've got to pay a booking fee. They've got admin fee of 6K. And they've got that 6K in the ISA. They're taking the money out of the ISA.
Yeah.
Okay. Because that's the objective. The objective is to get the house. So as much as it would be great for me to be in a position to say, hey, just do both, because the plan suggests that you should do both. The real question is, like, do you have enough at that time to do what you need to do? And how important is it for you to get at that point? And if you didn't get at that point, how would you feel about that?
Yeah.
And that is
It's tough.
yeah. And that's probably, I almost feel like I'm fighting advisors. I'm not, because I'm an advisor myself, but that's what the financial advisor's that's what the financial planner's going to ask you. They're going to ask you, how important is it for you to get it now? Do you need to wait? Can you wait? Or can you get it now? Because who knows what the next year could look like. The next year could be price goes up and then you're chasing it again. So from what I've seen, most of the time, people will tend to take their money out of everywhere and anywhere to buy the house, and then they'll start from scratch.
Yeah.
Yeah.
It's that's the thing. Like, it's tough.
Yeah.
But it's resources, and if the resources are limited, you gotta make some
do what you do.
choices, right?
Or do what you can do.
Like, some people be like, oh, don't buy the house,
Yeah.
continue renting. But it's a personal choice, right? I don't think there's any really wrong answer. A lot of people say, no, keep renting and just bang the money in the stock market, right?
Yeah.
I always see that, online, and I'm like, I get what you're trying to say.
Yeah.
But also, I think a lot of people, when they say that, they neglect security.
Yeah.
Renting is not secure, really, because that landlord could at any point sell, right? Could, a range of things could happen, right? You might outgrow it, whatever. You might need to go and move somewhere else. It becomes too expensive. You hear what I'm trying to say? I'm not saying that a mortgage makes a mortgage or property safe. I'm just saying that you have more control of that situation, right?
And also, most people are irrational when it comes to investing and making decisions with their finances.
Exactly.
So, although there may be a logical answer in terms of how to address it, the real question is, how do you feel about it? How do you feel about it?
Yeah.
And that is usually what drives a lot of people to make these decisions. It's the same thing with buying and selling in the stock market. You will see all of the, the Bitcoin warriors come out and be like, yo, you need to buy Bitcoin when Bitcoin's gone up to $50,000. You don't always see them when Bitcoin's low, for example, talking about it. And then everybody else will be making emotional decisions to buy at the high because they missed out to buy on the low.
100%,
but they'll never question if that was the right time to get in.
Yeah.
If that makes sense.
It's always like that. It's always like, I haven't heard nobody talk about Bitcoin anymore, because I guess the hype is died down, and now it's just the people that are really into it that hear it. But you're right. Like, with finance, it's crazy, because with the money thing, like, even I guess with a house, right? The difference, like, if you had a $1 million house and a £1 million portfolio, you're not really looking at those Zoopla nowadays. They're now sharing your thing, so now they're probably gonna cause the FOMO. But, like, you don't have some chart.
You don't have a chart telling you today.
Oh, it's
your
now
house
1
is
mil.
worth-
It's now 5. Is that? But you're getting pings. This down like. So I can understand like
Yeah.
now if it's like £100, you get it gets 1,000. You're like, okay, cool.
Yeah.
Gets to 10,000. Now you start like 100,000.
Yeah.
Start becoming. You
Yeah.
get a meal like okay, you
Yeah.
know. So it's like it's not as easy, like you say. It's not
Yeah.
as easy as people say. Just put it in the stock market because like. How many people really gonna wait to a meal?
Well, exactly.
Like have the fortitude.
But also,
to do
how
that.
many people have actually done the numbers
Yeah.
to check? I had a call with a potential client that said, "Hey, like, you know, I want to be a millionaire." I said, "Okay, let's talk about it. When? It's in 5 years' time."
Mm-hmm.
I said, "Okay, cool. Let's talk about it. So, why?" And he was like, "Oh, well, because I want to have a lot of money in it." I said, "Okay, well, so what do you want to start with? 5 years' time, he wants to be a millionaire." I think he said he wanted to start with like 40K. I said, "Okay, well, it's a lot of money for some people. It's a lot of money. Okay, cool. So let's actually look at the numbers. 40K, do you have any more money that you're going to put into this?" "Oh, I might put in, I don't know, £1,000 a month, something like that." Okay, so now we're talking, what, 12K a month, a 12K a year for 5 years. That's another 60K. So now you're telling me you want to, over 5 years, put 100K in, and you want that 100K to turn to $1 million over 5 years. What is the growth rate on that?
10x, isn't it? Right.
Yeah, just straight line,
Yeah.
10x. It's probably even more
Yeah.
because it has to take into account the time weighted value of money when the money's going in. It's not 100K straight away.
Yeah.
So it's not compounded straight away.
Yeah.
There's so many different factors that need to take into account. And when I think when I looked at numbers for him, I said, "Oh, you're probably gonna have to get a return of like 130% a year."
From where, please?
So that was the conversation.
Yeah.
You know, and I think sometimes people have this idea that the stock market is this mystical place that it's like what's that? Chronicles of Narnia. You know, you go into this wardrobe, you walk in, you come out the other side, and you got £1 million.
Yeah.
You know, and you know, for you it's been 5 years, and for everyone else it's been a day. You know, they look, "Oh, it's like this guy's a millionaire." It's like, do you know what I mean? And
Yeah.
even the idea of that growth rate is I don't know where you see that on a consistent basis. And I think that's part of the problem. A lot of people come in with unrealistic expectations because of what they've seen online, because of the stories that they've heard, and they assume that, you know, it's going to be them, isn't it? And yeah, you got to be positive and you got to be optimistic, but also the one thing that we as advisors, as brokers, as traders, we look at is, you know, the realistic outlook of some of these trades, some of these investments. Yeah.
Yeah. Love that. So if somebody wants to start their investing journey today, what's like the 2 actions that they could take, like practical actions they could take to basically get started?
So practical actions would be, again, start small. Start small and regularly, so that you can get into a rhythm where the investment becomes part of your lifestyle.
Yeah.
It's not something you think about, it just happens. And you know, I guess diversification is key, and diversification is all about kind of, you know, spreading your net across the board, you know. And the reason why you're supposed to do that is from a form of correlation.
Yeah.
Yeah. The whole purpose of that is not because you like Tesco and you like Sainsbury's, or because you like Barclays and you like Lloyd's. It's because you want to buy Barclays over here and you want to buy Diageo over here, or you want to buy, you know, Amazon over here, or you want to buy Rio Tinto over here. You're trying to diversify your portfolio so that if one market, one sector doesn't do well, the other one is there to kind of save you. And you want that so that you can spread the risk. And people forget about the idea that when you put your money in the market, it's a risk, which means that at some point you're going to lose money. It's just a question of how much you lose. Because not every trade is going to go off. Not every investment's going to go off. But what you're hoping is that the good investments outweigh the bad ones.
Yeah. Love that.
Yeah.
Absolutely love that. Okay, so I wanted to really talk about this because this is important, right? So, you know, when we spoke, you said you don't have to invest in property.
Yeah.
You don't have to invest in, you know, stocks, right? You actually gave us an example, somebody doing another type of investing that made them a millionaire probably faster than these other things. Could elaborate on that a bit for us?
Well, it was
generally
it was a startup. It was a company that was growing, and the founder backed themselves, and they put their money into the company, and they grew the company, and they brought other employees on board, and they were in the advertising space, and you know, they started to raise some money, and eventually, you know, put themselves in a really big position to get some backing, some founders, and off the back of that, they, you know, they're in a good position now. Do you know what I mean? But that was over time. That wasn't a put money in stock market and just sit on it and 5 years later, ta-da. It wasn't that. It was hard work. It was kind of, you know, grafting every day, non-stop, you know, applying their skill set and showing up and, you know, getting the work done. Yeah.
And that's the power of investing in yourself to build wealth.
And that's the one thing I am trying to also talk to people about, how important it is to invest in yourself. And that could come in different forms. That can come in, you know, learning a new skill that can put you in a better position. That could come in having a mentor. That could come in having a coach, a financial advisor. That could come in having a business coach. Like, there's so many different ways to invest in yourself that can take you to the next step. That can come in, you know, paying for a ticket at a networking event and sitting on the table with the right person.
Yeah.
So you have to consider that as part of your portfolio. You know, how much of that money do you have disposable? How much of that 20% that you have is going into yourself, as well as the pensions and the ISAs and the business and all this other stuff? How much of that money is also going into yourself?
It's true, because I love the fact that you say we should see ourselves as a portfolio. I don't think we talk enough about seeing ourselves as a portfolio. We put all the faith in other things, but not ourselves. You put it into the property, you put the faith into the property, you put the faith into somebody else's business, but not into you, like maybe like your career or your business. You know, you don't maybe put the faith there, right? And I think actually when you think of it more like that, it's like you say, it's like, it's not like even balancing your chip. It's like just having a split. Okay, maybe some stuff is going to saving for property. Maybe some stuff's going into investing in stock market. Maybe some other stuff is going towards me developing for my career or me developing for my business, right? And then, like you say, then you gradually across the top,
even reading,
doing well.
reading the right books.
Yeah.
You know, I wasn't always the best with kind of staying on top of reading, and you know, every time I go back to like, let me pick up this book and do this, it just reminds me like, okay, like this is what this is also about. There's a lot of value in a lot of these books that are out there. Do you know what I mean? And that also can be a start of just investing in yourself as well.
Yeah. So I definitely wanted to talk about that, man, because the UK, man, you know, I've been seeing some stuff. I think some people are pessimistic about it, and we spoke about the UK. We both know people that are moving abroad, moving countries. You know, obviously in the UK, stagnating wages, low growth, high inflation, high interest rates. We know this, right? So, which is obviously making people consider, like, you know, moving abroad, right? So, I guess in your opinion, right now, can you still build significant amount of wealth in the UK? And is the UK the right place to be thinking about building your wealth, especially as, you know, people are looking to have families
Yeah.
here or whatever, right? You're looking
Yeah.
to build your life here, right?
No, I'm joking about that.
You said like, no.
Everyone leave. It's a wrap.
Just
It's a
leave.
wrap. No, I think you still can build wealth. I do think is much harder because, you know, cost of living has increased so much for a lot of people, and we're not seeing wages increase as much. But I think part of the problem is people are relying on external sources to dictate these decisions for them. So prime example is, you know, improving your salary. You know, they always talk about the difference between like men and women in terms of like the salary gap and stuff like that. And they usually talk about the idea that, you know, in a lot of cases, men are more willing to like negotiate their salary than women in certain scenarios. But what we're seeing a lot of now is people are, both men and women are going into roles and going, yeah, especially the younger generation going, yeah, I'm going to go to this role for a couple of years. And if I don't get what I want, I'm going to look for another job and find a higher salary. And that, I think, is one of the ways that they should be thinking about growing wealth by increasing their income. And the reason why that's important is because it's about the money you save from your income that is going to help you grow your wealth. So you could have a reasonable income, and if your saving rate is at a high level, you know, the 85%, for example, it's ridiculous, but it's 85%, you know, you'll be better off than the guy that's earning twice your income, but that's only saving 10%.
Yeah.
You're in a much better position. So a lot of it is not just how much you earn, but how much you save.
Yeah.
Yeah.
Okay. I love that.
Yeah.
I wanted to understand some tips from
Yeah.
you as well, right? And I appreciate that as well, because I do think that there are still opportunities here.
Yeah.
I think you just got to be a bit more tactical about the opportunities that are here in the UK. It's not that you cannot be rich, because there are people that are rich here, right?
Yes.
Still making millions.
Yes.
Still making. It's about just the opportunities. About, I think what happened with COVID is that things pivoted a little bit.
Mm-hmm.
So it's figuring out. It's like everything will equalize. People start figuring out. Okay, maybe, you know, maybe over COVID I stayed at my job for a bit too long. I'm still here, so actually let me move somewhere else, you know, that maybe values these skills, and I'll get paid more, etc.
Yeah.
And you know, stuff like that. Or actually, I'm thinking of starting a business opportunity. Since COVID, actually, I started to notice this is now happening. So let me, you know, I think it's also pivoting. And I think that's what happens, unfortunately, in life, right? That if you don't pivot yourself, sometimes you're going to be forced to.
Yeah. I think
COVID just forced people to, right? That's just what it is, isn't it?
You're
That's how it
hearing
is.
all these stories of like, you know, you hear the story of like, is it the Krypton Conan story with the product that they brought out, Nyla's cream, and then they're like, hey, like I was at home just trying to figure out what to do, and then I thought of this, and why don't I try this? Do you know what I mean? And it was almost a pivot. Like, I got nothing to do. Let me figure it out. Look what he's done with this.
Exactly.
Do you know what I mean? And you hearing a lot of people, and what's interesting, if you look at a lot of like over time, a lot of people tend to you know, grow their businesses during times of recession. Yeah. You know, that's usually the moment when they're kind of at, okay, well, there's nothing else. I might as well. Yeah. And their appetite for risk kind of heightens a little bit. Yeah. Because they're almost looking at, they're now in a position where mentally they're like, well, the worst case scenario is I land where I am currently. Yeah. So what difference does it make?
Exactly. So from a financial perspective, what if people do want to stay here in the UK versus maybe going abroad? Yeah. What should they be considering? What should they be thinking about over the next 6 months to a year to the next 2 years?
I think they should be thinking about where they want to live, because right now rents are going up ridiculously. Average rent is kind of ranging between like £1,200 for like a studio flat or stuff like that. House share
in London.
In London, to like $2,000. Yeah, you know, I was talking to a friend of mine called me and he's like, look, I'm thinking about renting. I'm ready to kind of like get my own place. So let's sit down and do the numbers. And he was like, look, I want my own place, just like a little 1 bed, whatever. I said, cool, let's have a look at it. We started looking around the areas that he was thinking about. We found something for about £1,500 rent. Yeah, rent.
That's mad.
Then we added bills. So, okay, let's talk about the bills. What's that going to be? £300-400? £1,900? Okay, cool. Now, food, travel, any other activities, going to the gym, all that kind of stuff. We add, let's call it another £500-600 if you want to be a bit.
Yeah.
I wouldn't even say lavish. Like let's just stretch our legs a little bit. We're now at £2,500.
That's crazy.
Now, what was quite interesting was, I said to him, look, let's say you was to move to Peterborough, and we looked for a 1 bed rent. The difference was about £875. So, the biggest hurdle is, where you're living right now. And what that might mean is maybe you stay in house with mum and dad for a bit and grow your wealth. Maybe you start thinking about growing your wealth collectively. I've had calls with clients where I've said, like, why are you moving out? Why don't you just, like, there's 2-3 of you here, like, pull together, Takes a village, isn't it? They always say that. It's like, pull together. Why are you so quick to fly the nest? And I get it, I want my own freedom. She keeps coming into my room, all that kind of stuff. It's a lot of frustration there. But find a way to pull together. And I think we're gonna probably see a lot more of that. Yeah. We're gonna see a lot more people having to find a way to kind of live with other people, purely because of affordability. Not because of like comfort or what they actually want. They're going to be forced to, do that. You're probably seeing it now. You're probably seeing people that are maybe not even together anymore. They're like, well, look, let's just be quiet. Let's just, you stay on your side, I stay on my side. Keep the rent low. We're good to go. Because it's becoming so much of a cost just to make that jump by yourself.
Yeah.
How are you supposed to save? That. When we're talking about the budgeting aspects of things, they usually talk about, putting aside, 25 to 30% of your income going to your mortgage, your rent. Yeah. Right now, it's probably about 45%.
That's mad.
In a lot of cases.
Yeah, it's crazy.
So it's a lot of money going to that side, which means, where is the saving coming from? And if you do say, brilliant, what lifestyle do you have? So I think that is the biggest hurdle right now.
Yeah. And see, this is why people are thinking about moving, because they're like, we don't want flat share. Let's go and get free tax somewhere else. And actually, talking about that, I wanted to bring this up because I think this is interesting. You moved to Switzerland for 6 months, right?
Yeah.
What did you kind of learn about, like, from, living in Switzerland, from your time there, like just personally, professionally for yourself, and then even like the money system of how it works? Because I think I was checking, and I don't know if I'm right here, but it seems like their tax was low. Is that true? Their tax is low, isn't it?
Yeah. So
I was looking at it, I was like, this don't make no sense. Why am I getting so much more disposable income? I was just doing numbers, right? And I think I put like 100 and I think I did 150k.
Yeah. Swiss francs.
Getting back 100k. I was like, what?
Yeah.
Crazy.
Switzerland's an interesting place. So they have cantons. They have like different cantons. It's like different areas.
Yeah.
Each canton has its own kind of like tax rate a lot of the time. I was in Geneva. Geneva's expensive.
Okay.
Geneva's expensive. But even in those kind of areas, I think at the time, this was like 2017, like the income tax was probably like 12%, stuff like that. Now, what's interesting is the way that they address their system is everything else costs money to be there, but you have more money in your pocket. So you get to dictate what to do with that money. But there's almost this kind of incentive to spend in your economy and keep the economy thriving. So though things cost a bit more, you have a bit more money, so you're okay with making that spend. Whereas the opposite is almost here, where you're getting taxed on everything, and then they increase the taxes on fuel tax, and they increase taxes on cigarettes, and they increase taxes over here. And you're like, well, okay, I remember lockdown, the eggs were like £3.50. I'm going there, like that's
wow.
That's a
I'm
problem.
sorry.
That was
That's
a problem.
Big problem.
Do you know what I mean? So if you're increasing everyone's tax burdens and all this kind of stuff, it's gonna affect what their options are.
Yeah.
And I think that was the difference over there. It gave them a bit more choice, with a bit more trust with how they spend their money, and they were more willing to spend it back in the economy and circulate the money.
Yeah, because you got more choice, you got more autonomy. It's likely you would spend it.
Yeah.
Whereas like you're here, we're kind of hampered, and like we're forced to give a bit more. And it's like, okay, are we gonna spend more? Yeah, no, it's absolutely crazy.
It was good. It was, I was there for 6 months. So it was my first kind of opportunity to move into financial advice. I went to a firm out there, kind of just jumped into the opportunity. I decided to come back home after 6 months, and it didn't go as planned. And I was like, okay, cool, let me come back. But like the experience there was interesting to see how they operate compared to how we operate here in the UK.
Yeah. What, like, how do they kind of act in regards to money? Are they like, what are they like when it comes to that?
They don't really. They're very, I guess, generous, I would say. But then they, on the other side, a lot of the people there have a lot of money.
Right.
I think I remember, we have like the universal credit and all that kind of stuff. One thing I remember is they were in a position where, if you were kind of out of work, from a certain job, they were able to kind of like help you offset that money with, let's say, the equivalent over there with a similar income.
Oh my God.
So
it's crazy.
Yeah. So, there was opportunities for people, not opportunities, but if you're out of work, there was actual support.
Yeah.
There was actual support there. Here it's a dive. It's a complete dive. If you're out of work, bam, you're like, you don't even know what you're doing.
Yeah.
Do you know what I mean? So it was a different thought process. Everyone was happier. Everyone was a bit more chilled, not fast paced, very relaxed. It was a very nice environment. Yeah.
Love that, Michael. It's been such a great conversation with you, man. I've learned like a lot, man, from your experience and your insights. So yeah, it's crazy, man. What you can kind of do in your career and how you can kind of pivot.
Yeah.
And the amount of, I think what I kind of learned from your story is the fact that you bet on yourself. And that's why I understand why you're telling other people to kind of invest and bet on themselves too.
Yeah.
Like, do you know what I mean?
I think you have to. And there's definitely been times when I've kind of questioned myself, but I think you have to bet on yourself. You have to look at yourself and say, like, sometimes you got to look at that guy in that mirror and say, yeah, you're that guy. Like you are him. Do you know what I mean? And you can do it. And not everyone is always going to tell you that. So you need to be able to tell yourself that.
Yeah.
Yeah.
Amazing. Do you, where can people find you if they want to connect with you?
Can find me on LinkedIn, Michael G. Donkor, the G silent. I'm joking. And, you can find me on Instagram, Mike G. Donkor. You can find me on my website as well, michaelgdonkor.com. So you'll find me there, and, feel free to reach out and, give me a shout.
Amazing. So much. Thank you so much, Michael. Yeah, definitely would love to have you back on for another episode in the future, because there's a few other things we wanted to talk about.
Hey, when you're ready.
But, we definitely will, man. I really appreciate you. Really appreciate your time. Really appreciate you sharing, all your wisdom and tips. I think it's very important for, especially us younger people to be understanding this and understand how it works. And, for those that are, I guess maybe feeling the pinch, I think always know there's potentially a way out. It might just be taking a time to think about it. We all have our own problems and things that we have to also think about all the time. But just, I think it's also always good to just take that time, think about it, speak to people,
definitely.
network and stuff like that to figure out how you can kind of get out of that situation. Do you have any final words for watchers and listeners?
Oh, final words. The one thing I always think about is the whether you think you can or whether you think you can't. Either way, you're right. That's it.
I love that.
Yeah.
I love that saying. Thank you so much, Michael. It was great to speak to you. Thanks so much for tuning into this episode of the podcast. See you next week's episode.